All right. I wanted to go over a trade that I made this past Thursday. I recorded this right afterwards, but I had like copywritten music and some other stuff going on in the backgrounds. So I figured I'd just re record it instead of it getting copyrighted or muted or whatever. So I was already in a position on SOXL, which is another one of these triple leveraged products. This here that is in front of you is UVXY, which is triple leveraged. Its parent is the VIX. The VIX is a volatility indicator that tracks the S&P 500 or slash ES for the futures or SPY as the ticker. Essentially, this UVXY goes up when SPY or the S&P 500 goes down. Now, I sold a position on SOXL right before I got in this, mainly because you'll see these two pretty aggressive candles right here. That made my other position work against me, and with the how fast the spike was, I took it off somewhere in this region just because it was spiking up. And it might have even been like by the time this hit here. Obviously, it's a different chart, so it doesn't look exactly the same, but it's pretty similar. But around this time in the morning, just a hair after 7 o'clock. So when I sold that position, I didn't want to risk it coming back to, coming back to the point where I was flat on the trade or maybe even losing money on the trade. So I just took it off so I could lock in some gains. And when I took that off, I said, well, if there's aggressive buying here, then the opposite version of these triple leverage products that are trading directly with the market, the indirect version, should be going up, because SOXL goes the same direction of the market. So as the market goes up, it goes up. Well, UVXY and SOXS, like there's plenty of leveraged products that work inversely to the market. So this one, UVXY, generally has better percentage moves in a given day than SQQQ. I could have also played SQQQ or what's the one that's SPY? SPXS would have played on this exact same logic and reasoning, and given like a similar result. But UVXY typically moves a larger percentage, like I said. So if I'm getting into a quick move for a quick, nice percentage, might as well take the one that's going to offer the best percentage move. So as I sold that other position, I said to myself that, that means that there's volatility somewhere else where I could buy some, get on a kind of ride a trend in the other direction on a different product. So I flipped to this and, seeing where it was, and with the aggressive spike. Now this was all based on a news headline from the Russia-Ukraine stuff that's been going on, and that's been kind of like startling the markets here recently. The news headline was in relation to a potential mortar in the side of a building that was maybe fired by Russia, maybe it wasn't, no one really knows, but it was a headline on Reuters, and I just kind of ran with it. I didn't plan this trade, which is why I didn't take huge size on it. I just kind of was reacting very quickly based on the news catalyst. Now, as you can see, I flipped this. I get in 300 right in here. I added 300 right in here, and then waited a little bit, added 150 here, just a touch below the VWAP, and waited for the open. Now, I took this trade off. Oh, I can't go back to my messages. Well, I know because the last time I recorded this video, I searched through it and I just watched that. I took this trade off at 9:01 a.m. So right here, if you see the clock down at the bottom, which way am I? Like right down in this area. You can see a little clock on the bottom of my cursor. And I took it off at 1590, so it was actually 15905, so it was like a fraction of a penny on top of the 90 there. But I took it off right here. Now there's a couple reasons I took it off. One is that the volume profile started to kind of change as we were ramping up and we were seeing things kind of run this way. We started to kind of plateau and the volume profile started to change. And I don't like sitting in scalps when they're finding new ranges. So I'd rather just get out and then wait for a new consolidation or a new area to get back in. Now, the other reason was, if I could show my top monitor here, I was watching the futures right here, which is slash ES. This is the 5 minute, but I was actually watching, oh, I got the 1 minute right here. This is the exact same time frame. So this right here, 901, that's where I exited the trade right here. I know it's probably kind of hard to see. It's on a small little chart right there. But the main reason I exited also is because as I was watching this and you see like this, I had this price level drawn here because we had kind of a range going. And I normally draw my price levels to cut off a little bit of the wicks of some candles because the price level for me is about volume traded in a certain area. And so I want the level to touch as many candles as possible. I don't necessarily want it to be on the farthest out point of the candles. I want it to be where it's traded through that price the most amount in a given set of time. And you can see right here, we broke that range by a little bit, even considering these outside wicks right here. We broke that range, but then reclaimed it. And you can see that that's at 901, which is right when I sold it, because as I see a range break, I want to see a move, like a more aggressive move down, kind of like we see a little bit later. We see a more aggressive move down and it doesn't recapture that range. So when I see a range break and then it recaptures it, if I'm already where I want to be in terms of profit on that particular entrance, then I'll get out and I'll wait for a new entry. Because it reclaimed that range, I didn't want to see that. And what you also notice is like, look right here at 921. And then notice right here is 921. Now, one would normally think, well, why is it that 921 is lower on the futures, but we didn't hit a new high of day on UVXY? Because if you think about it, if you're hitting a new low and this is the child of ES or of the SPY, then it should be hitting a new low or high a day whenever the parent hits a new low or high a day, right? But that's actually incorrect because these triple leveraged products are made to trade 3% relative to their parent on any one given day. So the nature of leverage works against a position asymmetrically. So if you have $100 and you lose 10%, you have $90. Now, if you have $90 and you gain 10%, you're back to 99, not 100. So that's what I'm talking about in that when the futures hit, let me go back to the top monitor here. When the futures hit this level, it had that momentum, which pushed it to be lower. And here at 921, if leverage wasn't a factor, then UVXY would have also hit a new high a day and probably been up in this region. But like I said, it works. These products, you really have to know what you're doing if you're going to touch a leveraged product. And I wouldn't recommend anyone do it that doesn't know very well what they're doing, because once again, these will work against you asymmetrically. They do not work directly. So these are for quick, fast momentum moves, and they're generally not to be held overnight. I know some traders will hold them for a few days at a time, but even that, you're going to have some parasitic loss because they rebalance them daily. But yeah, that being said, that's kind of how I execute on these triple leverage products. I look for a news catalyst, some sort of overarching catalyst to get in, and I ride them for quick momentum. Generally, for me, I'm usually not in these things more than a couple hours tops. This trade started at like 7:07 ish, maybe 7:08, and I was out of the trade by 9:01. So that's a couple hours, and usually if I'm waiting till the open, it'll be even faster. The only reason I held this so long is because the volume, everything happens way slower in the pre-market, and I entered this pre-market. So that being said, yeah, that's how I execute on the triple leveraged products. Once again, you shouldn't no one should do this if you don't know how these work, and if you don't fully understand what I was talking about with the math, how they work against you asymmetrically, because the parent has to move a lot further to get this to go back to where it was. So if you're down on one of these, you're gonna, like, let's say your entry price on the parent was $350, and you want it to get back to 350 so you can get back to even. Well, it actually will probably need to go to like 352 or 355 or whatever before you're back to even, because the leverage works against you asymmetrically. Yeah, so that being said, I will probably show a couple more of these and elaborate on further. I did have another play on Friday on SQQQ. I didn't hold it as long as I should. I only got like a little over $100 off of it, when if I would have held properly, I would have had like almost 10 times that. But I didn't have too much conviction in it, and I didn't want to hold anything over the long weekend, so it is what it is. Anyways, yeah, that's it for this one. That's all I got.